Well, good morning and thank God it's Friday, right? You're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let me take you through the headlines. Asian markets look all set to post weekly losses despite heading higher on opening today. China offers a $200 billion cut in its trade surplus with the US as the Asian nation tries to strike a middle ground on trade barriers. Pricing pressures weigh on Taro's fourth quarter earnings. Net profit inches higher, though, for the Sun Pharma subsidiary. A three-judge Supreme Court bench will later today hear Congress's plea against the Karnataka governor's decision to invite B.S. Yediyurappa to form the government. All right, let's turn to the international markets. Wall Street was dragged lower on Thursday by concerns about a trade war as the dollar climbed and the U.S. Treasury, the 10-year Treasury yield, hovered above the 3.1% mark. Bloomberg's Abigail Doolittle wraps up all the action on Wall Street in this report.
Stocks ended lower in Thursday's Wall Street session, with the Dow, the S&P 500, and the Nasdaq falling slightly, down between about 0.1% and 0.2%. So again, a very small drop on the day, but a bit of a reversal from the trading action in the morning when the three major averages were trading modestly higher. Now, relative to the sector composition for the S&P 500, not surprisingly, it was a pretty even split, with 6 sectors trading lower, 5 higher. Up top, energy up 1.3%, really getting a tailwind from oil. In London, oil traded above $80 a barrel. Also helping the energy sector, bullish comments from Morgan Stanley on the refining space that helped a number of those names, including Valero and Marathon Petroleum. Now, turning to some of those sectors that did less well on bottom, real estate, telecom, and utilities, those rate-sensitive sectors fell as rates once again climbed. The 10-year yield above 3% at 3.11%. Another sector that finished lower, technology, weighed on by the likes of Cisco, Apple, Microsoft, and Micron, among others. That was down about 0.5% overall in Thursday's Wall Street session. But with the major averages falling just slightly and Haven assets pulling back just a bit too, Thursday's Wall Street session, the tone wasn't so much risk off or risk on, but it was more neutral. In New York, Abigail Doolittle, Bloomberg News.
All right, and the U.S. and China resumed trade negotiations on Thursday to try to avert a damaging trade war, with the Trump administration demanding a $200 billion cut in China's U.S. trade surplus and greater protections for intellectual property. Bloomberg's Jody Snyder has all the details in this report.
Well, it's a big number, and though we don't know the details of how they would get to that number, how that would be arranged, it is said to be through more American imports and other measures.
You can just change the calculations, actually, and look at software, and that makes a big difference, but that's another story altogether.
Right. So, proof is in the pudding and all these things, devil's in the details. But if there is that serious offer of $200 billion, that is significant. It's important not only because of what it represents in terms of the reduction in the trade deficit, but it's a significant sign that China is serious about these talks and about avoiding an escalating trade war. The very fact that they sent the vice premier, who was a member of the inner circle, to Washington after the Beijing talks didn't go so well is also an important sign. So it looks like China is serious. Now the question is, what does the U.S. have to give up in return, and can this be a deal that allows them to keep talking and avoid those tariffs?
Well, the early risers in Asia, the Asian markets, of course, opened low and then essentially clawed back some ground. So the Nikkei is currently up about 0.5%, and so with the other early risers, the Kospi also rising a bit. But China is just about opened. It's currently flat. A few ticks in the red at the moment. We'll have to see how that pans out. Hang Seng as well, more or less flat in early trade. With that, let's turn to India and the trade setup for the day. Jayesh Khilani and Darshan Mehta are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Jayesh, first to you. What's on your list today?
Morning, Alex. Looks like a weak outlook as far as the SGX Nifty is concerned, given what happened to the Nifty yesterday as well. Now, if you look at the SGX Nifty, that is in fact trading about 30 points lower, 0.3, and we will have a start which will be below 10,700 if this rate is to go by. And now, if you look at some of the ADRs that actually traded over there, most of them ended lower as well, except for Tata Motors and Vedanta. So we had Vedanta, which actually declined about 2%. ICICI Bank also declined down about 1%, and we had Wipro and HDFC Bank, which also closed negative. Now, as far as gainers are concerned, we had Tata Motors and Infosys, which climbed, and we had Dr. Reddy's, which also closed negative. If you look at the commodity cues that we are getting, oil prices once again trading positive with 1/10 to 2/10% of gain over there. So Brent essentially yesterday it hit the $80 per barrel mark, but that has actually been breached on the lower side and once again trading at near 79.50. If you look at the base metal space, no major cues coming in over there, though the LME base metal index in fact climbed for the second straight day. We had commodities like copper, zinc and nickel, which closed positive, while we had aluminium and tin, which closed negative, with lead leading the way, about 1.4% higher for that one. That in fact snapped its two-day losing streak. Now, if you look at the Chinese exchange, the base metals are in fact trading with a mixed bias, where you have copper and zinc, which are positive, while the other two are negative. Gold prices also, we have seen a lower close for gold prices 3 days this week, still below the 1300 mark. Taking a look at the fund flow picture, the larger trend that we have seen, that in fact continued. So the FIs have in fact sold 831 crores yesterday, while the DIs pumped in 428 crores. For the month itself, FIs have sold 3,500, while the domestic institutions have bought more than 7,000 crores worth of equity. The key indices that we have, Nifty, that in fact closed lower by about 0.5%. Once again, we saw that the mid cap and the small cap index actually outperformed that. So the mid cap index ended about 2/10 in the green, and the small cap index in fact surged almost 1%. If you have a look at what gained, so we didn't have many gainers over there. Nifty Pharma, so you can look at the gains that we had, just about 4 points. So that tells you something about the trend of the market and the sectors that lost. Now we have FMCG index, which actually declined more than 1%, and we had the Nifty Energy index also 0.75% shed over there as well. The India Volatility Index, that closed largely flat, but within the day there were highs and lows. If you look at the contribution now, what led to the near 58-point fall, we had Bajaj Finance, Bajaj Finserv, which battled for the bulls, while we had HDFC, ITC and Reliance, some of the heavyweights, which dragged the index lower. But Darshan, what can we expect from the F&O market?
Yeah, so basically today the SGX Nifty is indicating a negative outlook. It's down almost 26 points, and there was pressure that was seen by the company, by the heavyweights. In fact, yesterday, if you saw yesterday, the Nifty was down 0.5%, but the open interest decline wasn't much, so it was mainly long unwinding that was happening on the Nifty. Now let's take a look at the Nifty Bank, and we'll come to know what exactly happened there. And there were fresh short positions that were taken. PSU banks have been rather volatile over the past few days, so fresh short positions taken on the Nifty Bank. Now, if you're looking at what the Wix did, the Wix was absolutely flat in trade. It's trading absolutely flat, so there's nothing much happening on the Wix side. But this is where call writers became much more aggressive in the market at this point of time. So at 10,700 and 10,800, there seems to be significant amount of resistance that's coming in on yesterday's trade. So yesterday 10,700 and 10,800 is where call writers took in positions. Now let's take a look at what happened, where the positions are taken. Right now put writers are active from 10,700 to lower levels, and call writers from 10,800 to higher levels. So the range pretty much seems 10,700 to 10,800, but the pressure is coming in. The SGX Nifty is indicating that we might go below the 10,700 mark, so there will be more call writing happening here, and this red line will actually become much shorter if there is selling pressure that's coming in. Stock specific, Reliance Communication is the only stock that moves out of the F&O band, a big 60% move that came in yesterday. The start of yesterday was Bajaj Finance, moved on high open interest build up of 8%. Probably the traction will continue at a fresh 52-week high. And the second stock I want to point out is TVS Motors. 18% open interest built up on the short side. Management not giving any kind of guidance as far as double-digit EBITDA is concerned. That was something that troubled the street, and short positions were taken on the counter.
Thanks so much for that, Darshan. Let's go to a quick check on oil. Oil, in fact, Brent crude hit $80 a barrel for the first time in London since 2014, late 2014. And that's because of signs that global stockpiles are shrinking. It has since come below that $80 per barrel mark. But where are they headed from now? Aaron Clark of Bloomberg News has this report.
Well, there's a few things that drove oil, Brent above $80 a barrel yesterday for the first time in 3 years. The first is really global inventories. I think there's a growing consensus that you've got demand really more in line with supply. And remember, that's been OPEC's goal the last few years of these, they have imposed these production cuts. So you're really seeing the results from that bear fruit. There's a couple other geopolitical factors that are underlying that right now. Of course, Venezuelan exports are the lowest in more than a decade because of the political situation. And then you've got the U.S. pulling out of the Iran nuclear deal. If the U.S. reimposes sanctions on Iran, then you could see OPEC's third largest producer, be forced to reduce exports. So I think those three factors are really contributing to higher oil prices across the board, especially for Brent. And that's why you see it near 80 right now.
Okay, and what does that mean then for U.S. crude exports? I mean, the higher the oil prices go, are we going to see more U.S. crude oil exports?
Yeah, definitely. One interesting thing that's happening, though, is you're seeing the differential between global prices, Brent, which is near 80, and WTI, the U.S. benchmark, which is near 71. You're seeing that widen, and there's a couple reasons for that. Of course, the U.S. shale producers are going to pump as much oil as they can, and they're going to try to meet any global shortfalls and meet demand, and they're doing that, and you're seeing record U.S. exports. But if you have these pretty significant supply outages, potential disruptions or further disruptions from Iran and Venezuela, there may be limits on how much the U.S. can export. You had Goldman coming out yesterday saying that there may be pipeline constraints in the U.S. that limit exports to some extent over the coming year. So we'll really have to see, one, how much demand growth there is over the coming year, and then also the other factor is if OPEC lifts their production cuts and allows their members to export at full capacity to meet future demand. So those are some of the factors we'll be looking at going forward.
All right, those are the factors that are affecting oil at the moment. And sticking with commodities, Jayesh Kilnani is here to tell you more details about what's happening in that space. Jayesh, over to you.
So Alex, like I was telling you, oil prices currently trading about higher, for the fifth consecutive session. Now, what has happened recently is that the spread between WTI and Brent, that has expanded to a 2015 high. Abnormal move coming in from the Brent market, while the WTI has not surged as much. Now, if you look at the base metal space, the index itself on London Metal Exchange, that closed higher for the second consecutive session. As far as individual base metals are concerned, as per a Bloomberg survey, copper traders are neutral on the outlook now, so we'll have to wait and watch how it pans out. Yesterday it closed up on the London Metal Exchange, and aluminium closed low on the back of drop in the aluminium orders, which shows that the supply concerns may be easing. The orders in fact fell 37% on London Metal Exchange, and lead, which is the top gainer in trade, that snapped its 2-day losing streak and ended about 1.4% higher. If you look at the precious metal space, gold prices have in fact been under pressure in the recent past. 3 days this week, gold has ended on a lower note on the back of the dollar index, which has gained for each and every day this week.
All right, thanks for that, Jayesh. Moving to earnings now, it's likely to be a strong quarter for two-wheeler maker Bajaj Auto on the back of strong volumes. Net profit is expected to rise 21% on a year-on-year basis, and revenues may see a 35% jump. Now, the company's operating performance is likely to see a healthy growth, while margins are likely to remain flat with a slightly downward bias. Among other parameters, price realizations are seen improving 2 to 3% year-on-year. That essentially means that they're earning more per unit. Now, what do you need to look forward to in the management guidance? Projections on the sales growth in the current financial year and the outlook on domestic demand, as well as a guidance on margins. All right, let's move on to the other earnings. Biocon's Bengaluru plant was issued a Form 483 by the US FDA with 7 observations. Bloomberg Quint has access to the form, and Darshan Mehta is here to tell you what some of those key observations were that were highlighted by the US drug regulator. Darshan.
Well, Alex, there were 7 observations which the management had, on May 2nd indicated that they had the US FDA released the Form 483 yesterday. I'm not going to go through all the 7 observations, but basically if you see the 7 observations, it gives an indication that there's nothing serious as far as this 483 is concerned, I couldn't find any kind of data integrity issues here. Basically, what the Form 483 was in terms of some procedural issues where they will have to make some bit of changes in terms of how the procedure is followed, some bit of employee training, some bit of cleanliness, and some bit of equipment cleaning. So broadly, this summarizes what the Form 483 is. As far as what do we make out of the Form 483, basically there are no serious concerns. Highly unlikely that this Form 483 will be escalated into something like a warning letter and an import alert. So that is something there. And finally, another routine inspection. If they gave more training records, if they gave the records of what they've done, high probability that this plant may be cleared. Morgan Stanley's come out with a note. They find no data integrity issues as far as this plant is concerned. So pretty much will go out. The management comment, they have also indicated the fact that the observation are procedural in nature and will aim at continuous improvement as far as their plant is concerned, and they will respond to the US FDA in a timely manner to get the entire thing sorted.
All right, thanks so much for that, Darshan. Clearly, one stock that you have to watch out for and trade today. What are the other ones that you have to watch on account of them being in the news? Well, Shraddha Babla has an entire list to tell you about. Shraddha, morning.
Good morning, Alex. I'm going to start off with some of the companies which reported numbers after market hours. Very strong set of numbers coming in from Man Infra Construction. Revenue growth of 35%, net profit growth came in at 21%. Operational performance was extremely strong with EBITDA growing by about 69% and EBITDA margin seeing an expansion of about 700 basis points to 39%. Good set of numbers also coming in from Lux Industries. Revenue growth of 27%, net profit growth of a much stronger 68%. At the EBITDA level also, margins rose from 13.5% to 16.2%. KEI Industries, another company, good set of numbers, revenue, net profit and EBITDA growth in between 38 to 40%. So all of them, all the parameters showing decent growth. On the other hand, there was disappointment as far as Merck Electronics is concerned. The revenues fell by 10% and on account of that operational leverage not kicking in, you have net profit falling in by a sharp 71%. EBITDA margins have also fallen from 9.1% to just 2.4%. So you could see some negative reaction there. That apart, you will have Fortis Healthcare, which will continue to remain in focus. They've said that IHH Healthcare has extended the acceptance period for the revised offer till 29th May now. And then you have IndiTrade Capital, a smaller listed company, but there's an ET report which says that they're looking to sell their equity broking business to Choice International, and the deal value has been pegged at 32 crores, so watch out for that name. And lastly, on the back of bulk deals, we're tracking Future Enterprises, where the promoter Central Departmental Stores Private Limited has bought 4.9% stake. You have an existing investor, Bennett Coleman and Company. They bought about 8.5% stake. They already held 4.49. It's a big addition over there. And on the other hand, Cedar Support Services Limited has sold 13.6% stake, which suggests a complete exit. So again, let's see how Future Enterprises reacts today.
All right, thanks so much for that, Shraddha. Moving on, the market regulator has warned Punjab National Bank to ensure compliance with all provisions of its listed obligations and disclosure requirements. This after SEBI found PNB's disclosure to the stock exchanges to be delayed. Vishwanath Nair has this report.
The Securities and Exchanges Board of India has issued a warning letter to Punjab National Bank saying that the bank had violated some of the listing norms that are supposed to be followed by every listed organization. Essentially, what the markets regulator said is that the bank did not adequately disclose any complaints that were filed with the Central Board by the Central Bureau of Investigation within 1 to 6 days, as is the requirement by any listed company. The bank also did not provide 280 crore or make any disclosure about a 280 crore fraud that was detected when the December quarter results were being announced. Remember, the bank disclosed it to the market a day before it announced its results, saying that it had found some fraudulent transactions worth 280 crore and that it was pursuing investigation in the matter, but no such disclosure was made in the results or in the financial results page. So the Securities and Exchanges Board of India has said that this is a serious violation of the listing norms. However, it did not levy any kind of punishment on the bank. It did, however, give a stern warning to the bank, saying that no such activity should be repeated anytime in the future.
All right, well, that's a lot of what you can find on the website. There are several other stories, of course, that you can also find on the website, including all the live market action over the course of the day. Here are just a few stories. In a confirmation of a story by Bloomberg Quint, ArcelorMittal said that it will settle outstanding dues in 2 companies where it is a passive shareholder in order to become eligible for the to bid for Essar Steel as part of the insolvency process. In other insolvency news, Tata Steel is preparing an 11,500 crore rupee loan to help fund its purchase of assets from Bhushan Steel. That's a Bloomberg story. Also, meanwhile, the Congress on Thursday decided to stake claim to form government in Goa, where it had emerged as the single largest party in the assembly polls held last year, according to an ANI report. Similarly, Congress leaders in Meghalaya and Manipur have also sought a meeting with the governors of their respective states. Also, the RJD has said that it will meet the Bihar governor at 1 p.m. today to demand that the current government is dissolved. It had emerged as the single largest party in the assembly polls there. One of the most anticipated smartphones of the year is finally here. The OnePlus 6 was officially launched in India yesterday with the price tag starting 35,000 rupees. The so-called flagship killer will come in 3 variants and will be exclusively available on Amazon.com. Ayush Elavadi gives you a peek into the features.
If you actually unbox it, well, essentially, this is what the box looks like. The beauty that comes out is this. Yes, it is a little bit of a fingerprint magnet, but it is what you've been expecting. And we saw some sort of a reveal in London. But here it is in India. If I actually put it up over there, well, there is a lock code. Of course, there's 3 ways to open this phone. There is a beautiful face unlock feature. There's also, well, a fingerprint scanner. Thank God they still kept that because, well, people in the other communities are getting rid of the fingerprint scanning sensibility and that sort of, function. There's also, of course, normal pins that you can use. This, well, is the end-to-end 6.3-inch display. Now, when I say a 6.3-inch display, it is much improved. But if you think that this is just, well, a lot like the iPhone 10 and you're not comfortable with it, it's gorgeous. It's an AMOLED display. They've increased their screen-to-body ratio to nearly 84%, so you're getting a lot of screen. But if you're not comfortable with this, that's the cool thing about Oxygen OS and what OnePlus actually does is because they've tweaked their software, which is coming out of the box with Android 8.1 and Android P very soon, one of the few phones in the world which will actually have this. They will let you get rid of the notch. So then it will become like an ordinary phone. That's not all. It's snappy, it's quick because it has an 845, a faster processor.
All right, that's just some of what the features are. You'll find the entire report on the website bloombergquint.com, so do check it out. Now, after unveiling the world's first 3D printed building 2 years ago, Dubai now plans to become the world's 3D printing hub by 2030. The city plans to build 25% of its buildings using 3D printing technology by 2025. Here's a special report. if you can make a building using 3D printing, making a shoe shouldn't be that big a deal, right? Reebok is using 3D technology to break the mold. Bloomberg's Ann Mostew visited the Boston-based company's headquarters to see how it's using proprietary liquid material, software, and robotics to draw shoes in three-dimensional layers.
The footwear industry is seeing a jumpstart in technology. Nike's HyperAdapt made self-lacing shoes a reality. Adidas's Futurecraft introduced 3D printing with comfort. And now Reebok's Liquid Factory is making intricate, lightweight designs along with the company's 100% recyclable footwear line, Cotton and Corn.
This is our 3D printing lab.
Bill McGinnis is head of Reebok Future.
Liquid Factory is a way to get away from using molds like every other shoe in the market does and draw out the bottom of the shoe instead. So this is like 3D printing, only much, much faster.
It's an effort to streamline production and keep up with younger consumers.
The big goal is to go from, we're going to make 1 million pairs of one shoe in the exact same type and hope everybody likes it, and that was kind of the old model. And now we're moving to smaller and smaller batches, 10,000 instead of 100,000. And as you get tighter and tighter, you can get closer and closer to custom.
And how is that a benefit to Reebok? What are the benefits of new manufacturing?
So you can get a lot faster, so you can react much more quickly to consumers.
Reebok isn't alone. Parent company Adidas and rivals Nike and Under Armour have also moved into the 3D printed sneaker game. But Reebok's Liquid Factory material is proprietary. The process uses computer software and robotics to draw shoes in 3 dimensions.
We're actually faster than the old model right now. So each bottom unit takes a couple minutes to put together, and again, it's all automated.
Adidas bought Reebok in 2006 for $3.8 billion, and in 2010 began a turnaround to reposition it as a fitness brand by signing a partnership with CrossFit. But Reebok today is the one unit that remains unprofitable. Still, Adidas says it's committed to the future of Reebok and moved its headquarters from the Boston suburbs to downtown this year.
The spirit of the company has changed dramatically. I mean, we were always a very established shoe brand. Moving down here, being in the excitement of this district, I think has the whole place feeling like a startup.
It does feel like a startup, breathing new life into its classic white leather sneaker. Ann Mostew, Bloomberg, Boston.
Well, who knew you could draw shoes, right? That's a thought that you can take with you to the rest of the day. Up next is all you need to know on Bloomberg Quint.